Good morning. It's Wednesday, July 3rd, about 6 a.m. Central Time. Over at the precious metals are exploding after yesterday's contained rally. You've got silver up 2.6%, copper up 1.6%, gold up 1%. So yesterday we saw the latest reading on the labor market via JOLTS data, which measures job openings. And what I'm noticing is kind of a reoccurring theme, especially around this election year. And I wonder if I'd have to look back at my notebook if this is something that occurs basically every election year leading up to the election. So if the data is something that's like pro-economy and the government can be involved with it, such as job openings and labor data. Remember, the stronger that businesses are, the more people they'll hire, the more job openings they're going to have. So yesterday we saw the data, it beat expectations. It was up 8.14 million, and it was above the 8 million expectations. That was the mark, was 8 million, was kind of the bull bear line. So the number comes in at 8.14, beats expectations. We saw gold and silver come off on that. We saw yields go up. We saw the dollar go up. We also saw stock indices also go up. Well, if you look at the April number, which has already been already in the past, people have already traded off it, things like that. It was revised lower by about the amount that this month's had beat. And I think the bulk of these jobs openings are government jobs. So they could just be created out of thin air. The assistant to the traveling secretary, who knows? And then later deleted at a later date. I mean, it seems like some kind of manipulation is taking place by the government to pad a lot of these numbers for the current administration. I'm just saying, it's just an observation that I'm seeing. I'm sure that, Zero Hedge or somebody will have some story written about it, but it's just a little bit frustrating here when we're attacking something from a specific thing because we're noticing a trend in certain areas of the economy, and the numbers should be a bit more in line with what our thought processes and the numbers that we're running over here, and then they become wildly disconnected. That's the only frustrating thing. So, today it's going to be a busy day with the markets closed for the 4th of July holiday. We'll have ADP, we'll have jobless claims, we'll have durable goods, and then later in the session we're going to have the Fed minutes. I think the Fed minutes, because of the fact that those are dated from last month, I think that those are less relevant because of the fact that Jerome Powell yesterday came out and he said that the Fed has done quite a bit of progress. So if you look at last month, they're probably still hesitant. So it's just important to note that like the speeches are more relevant to what's going on right now, and then releases like Fed minutes are things that happened in the past. So if you look at the overnight session, we do have silver pushing up pretty good, and that's the one that I'm watching the most. So we've taken out the highs over we're starting to chew into that June 21st big sell-off. So remember, it was like we had on the 20th, we had a massive rally. It was like $1.24, and many of you took quite a bit of exposure off. And then the next day, that proved to be a great spot, and the market had sold off, and then we kind of came back below the 50-day moving average. Now we're breaking above it. So it's really important to see this market get over about the 3101 area, 3112, somewhere in that area. It's like pocket resistance. If we could break above that, the market should start attacking like 3250. You'll see participants really come back into the market. The stochastics are rising from oversold territory. DMI plus has been firmly over DMI minus, and that's been like that for a while. That's why silver never went to like a bearish trend. It got somewhat close, but not really. Now, if you look at the gold market, gold's got a real nice move going on here too. The August gold contract, we're pushing up to the upside. We're right at the 50-day moving average, which is 2360. That has contained the market since about June 7th. So June 7th was that big. It was the Friday we had a $65 sell-off. At one point we were down about $74. And then since then we have been unable to close over the 50-day. So we're getting close. 2360 is where we're at right now. Your critical level support is going to be 2300, 2386. I think that's what changes the dynamic of the market. I think that's where we go from these resistance points like the 50-day and that point to now the 50-day should be old resistance, now new support. And then I think 2400, that's kind of your key level. We break and we close over 2400. It's going to be the highest close since May 23rd. May was when most of the commodities all peaked, things like copper, and then we started to turn back down. So if we start attacking some of these upper boundaries again, then you're going to start to see the talk about breakouts, all-time highs, and things like that. Now, something to note is that the type of dynamic that we're setting up economy-wise in Q3 looks to be like sticky rising inflation and declining growth unless the government can fudge the numbers. So if you look at like Q2 GDP, 2.94%, expectations for Q3 is like something like 2.3. This is according to like Atlanta Nowcast GDP model. And then you go to Q4, it's only like 1.9%. So you got this declining growth cycle. So the things to really look at from the downside in your portfolios would be small cap value, Russell, things like that. That's where you want to tack that to the downside. Things that really catch bids are going to be your like secular growth, your momentum, things like that. The components of the QQQs. So you're going to see, you should see the NASDAQ, you'll see disconnects where the Russell's making lows on the day and the NASDAQ is pushing up on the day. So, that kind of spread chart trade, could be something valid here. Not a recommendation, but just think about it with your portfolio. If you have this thing in your head where you're like, the stock market has to come down, this is out of control, attack the small cap value and the Russell 2000, especially look for those days where we have big up moves there and use the micro contract. At least that's my opinion. And then another market that kind of sticking out, sugar breaking out to the upside. And then if you look at soybeans, they're having some bottoming action too. So we recommended some option spreads to our clients as well. If you have any questions, give me a call. It's going to be, I don't know if we close early today. Tomorrow we're definitely closed. Friday, I don't know if we close early as well. I'll do a video on Friday regardless. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.